And something big is on its way. And let me show you a really simple picture. But by now, everybody's heard of Silicon Valley Bank, as Silicon Valley, SVB, and FTX, and all those other characters running around out there.
I just call it Stupid Valley Bank.
Stupid
That's
Valley
the easiest
Bank.
way to remember it.
And I also call it foolish gold and foolish silver and all that other stuff. And all these REITs, real estate investment trusts, it's just foolish to me. I won't touch that stuff because it's all fake. It's all fake. But anyway, this is kind of the start of our problems here one more time. So you save money and you put it in the bank, but your money is your asset, but it becomes the bank's liability. Just remind you of that. And what happened was then the banks have to buy something, the banksters, they have to buy something to cover the interest they're paying you here. And so they bought all these T-bills and this and that and all this crap, I thought. And then all of a sudden people realized the bank couldn't cover it all. And that's when the savers start running back to the bank, give me my savings back. And that was what the FDIC, Federal Deposit Insurance Corporation, was for, to make sure that they would give you money back. But these banks had created so many fake assets out here, they couldn't cover it. And so that's when Janet Yellen, who's head of the Treasury, also she used to be head of the Fed. And the Fed says, we'll guarantee all these loans. In other words, the Fed and the Federal Reserve Bank, which is not really a bank, and the U.S. Treasury says, we'll back up anybody right now. And that's when George was at our 3-day here in Scottsdale. He says, the crack in the foundation has been seen, and they're trying to fill that crack up. Anyway, so it's a really frightening time, but the average person is completely clueless because they can't see this. So that's why George showed the group on the inverse yield curves, which blew my brain apart, but what's going on. And so a picture sometimes worth 10 million words. So George, show this picture you showed us at the 3-day in Scottsdale.
Yes, and this is the tsunami warning system that we were referring to, but probably more importantly, if we switch that chart of the inverted yield curve, and what we can see is the 2-year Treasury yield is higher than the 10-year. So just right off the bat, if I ask you, Robert, if you're going to lend someone money for 30 years, are you going to charge them a higher or lower interest rate than if you lend them money for 3 weeks? The answer is going to be a lot higher interest rate because there's a lot more risk.
For the longer term.
That's right. So when we see the short-term interest rates higher than the long-term interest rates, that's that, let's say it, the economic.
Yeah, it's just a bad sign.
That's the tsunami, the economic tsunami warning signal,
right,
saying, hey, something is really, really wrong. And most likely, we're going to have a significant recession or depression in the near future. Now, what does that mean? How do you time this? Well, what we've seen going all the way back to 1950.
Oh, wait, George, it's already hit. That was Silicon Valley Bank and Deutsche Bank and Credit Suisse. It's already hit.
Yeah, this is just the first cracks that you see in the system, but the dam hasn't yet broken.
Correct.
And so that's what the yield curve is telling us. So when the dam breaks, how do we time that? How do we know when that's going to happen, assuming that Silicon Valley Bank is just the first crack? Well,
what do they call it? The canary in the coal mine?
The canary in the coal mine. You got it. It's just this huge red flag.
Silicon Valley Bank. But then Credit Suisse went down. Deutsche Bank and the Bank of Japan's next. This is a global crash.
Yeah, you don't know which bank is next, but there's a lot of the whole global economy is very vulnerable. And this is what that yield curve is telling us. So what people really need to be cognizant of is when the 2-year yield goes back down below the 10-year, because when the yield curve is no longer inverted, that's when we usually get the recession or economic depression. And so right now, what the smart money is telling us through that curve is that we're most likely going to have that toward after the summer or going into the fall of 2023 or the winter, spring 2024.
Hello, Kazillionaires. Do you enjoy this video so far? If so, don't forget to click the like button. Subscribe and click the notification button if you want more daily updates on building wealth, personal finance, and achieving financial independence. Now back to the video.
Yeah, this is historically. So all people say, oh, good, the 2-year went down below the 10-year. And everybody thinks that's good news. But that's the reinversion and all this stuff. But it's not good news for the average person.
Yeah, that means that the tsunami is not 100 miles away. That means that the tsunami is 100 feet away.
Right. And I went to school to be a merchant seaman, so I traveled the oceans. And these swells don't bother the ship. I went through several tsunamis and all this stuff at sea over the years I was out there. It didn't bother the ship, but when it hit land, boom. So explain this buoy system and all that stuff, because that's what I studied as a student years and years ago at the U.S. Merchant Marine Academy in New York.
Yeah, well, there's direct parallels between how advanced countries know if a tsunami is going to hit their shores and the actual yield curve predicting a financial tsunami. Right. And so they have these buoys like 100 miles. I don't know how far are they out, but let's say they're 200-300 miles offshore. These underwater buoys can feel or can sense that pressure. That swell, that's underneath the actual surface of the water. And they send a signal to satellites, which send them to the scientists, and the scientists can warn the people that are on the shore, hey, you need to get out of Dodge. So the financial economic version of that system is the yield curve. So when the yield curve inverts, meaning the yield on the 2-year is higher than the 10-year, that's the financial system warning us that, hey guys, there's a big problem and this financial tsunami is coming at the shore very, very quickly. So it's not there yet, but you're going to start seeing the cracks, such as Silicon Valley Bank, Signature, Credit Suisse. So now as prudent investors, or just the average Joe and Jane trying to protect your financial security, you need to ask yourself, okay, what is the financial tsunami warning system telling me about what's going to happen over the rest of 2023? But what else is it telling me? What else, or what other signals or warning red flags can I extract from it? Well, the next thing that you need to look for is the curve no longer being inverted, which would mean the 2-year Treasury yield going back down below the 10-year. Because if you go back to 1950, you see that 9 times out of 10, that tsunami, that financial economic tsunami, hits the shore after the curve is no longer inverted. So that's what people really need to focus on now.
So let me ask this question. When somebody says the Fed pivots, does that have anything to do with the inversions and all this other stuff?
Absolutely it does.
What does Fed
Absolutely it does.
What does Fed pivot mean?
But when the Fed, so right now the Fed is in a tightening cycle. So they're raising interest rates. That's right. So the Fed pivot refers to when the Fed starts actually lowering rates. And so usually when you see the curve, we'll call it uninvert, if that's a word, it's a result of the Fed actually dropping rates and dropping rates very, very quickly.
And so so people will celebrate, oh, the inflation's over, everything's happy days are here again. Is that what you're saying?
Exactly. You nailed it. And then the Fed's gonna drop rates, and they're gonna say to themselves, "Oh, this is fantastic. The Fed came in, they saved the day. They're dropping rates back down to 0. We've got nothing to worry about. They're gonna, if we were gonna have a recession, now we're not." And then that's when that wave is gonna impact the shore. And for those people who aren't prepared, that's when they're gonna get financially destroyed.
Thanks for watching. Don't forget to click the like button. Subscribe and click the notification button if you want more daily updates on building wealth, personal finance, and achieving financial independence. And remember, the world is yours.